Let's go! Today we got huge news. All of the institutions which have been, investing into crypto, what are they now thinking? Was their investments just a, one-time investment and now they intend to hold it, sell it, whatever? Well, today we got some huge data I need to show you, and this is very, very bullish. Also, we are going to take a look at a bunch of other different news, such as how Binance is handling the regulatory crackdown against it, the date that has been released for the London hard fork, which includes EIP 1559, which, as you know, I am very, very bullish on for the price of Ethereum. So if that sounds good, then make sure to subscribe and activate the bell icon so you do not miss out on more videos like this in the future, as well as everything else I post here on this channel. So let's get started with a look at this survey I was talking about. So the survey was conducted during May and June, which is important to note because that is after the crypto markets had already dumped. So the questions in the survey were asked to 50 wealth managers and 50 institutional investors across the US, UK, France, Germany, and the United Arab Emirates with prior exposure to crypto assets, meaning they have already bought some. So out of the 100, 82% replied that they expect to increase their exposure to digital assets between now and 2023. 40% stated that they will dramatically increase their holdings, and only 7% intend to reduce exposure, with one planning to sell their entire holdings. One thing the company that conducted the survey did note was that many institutions currently have low levels of exposure, as they have just been testing the market to see how it works. However, with so many intending to buy more, it appears as if the testing phase may be ending and that they like the results from it. As for the reasons why these institutions and wealth managers want to buy more crypto, the top reason given by 58% of the respondents was the long-term capital growth prospect of digital assets. Or, in simpler words, they think crypto is going to go up in the long term. Around 38% of those surveyed claim that having some crypto exposure has actually given them more confidence in the asset class, and 37% said that seeing more leading corporates and fund managers investing in crypto is a reason they want to invest more as well. So, to summarize all of these results, the investors with the most money have given crypto a try, liked how it went, and are ready to buy even more. This is of course great news for us and anyone else invested in crypto, because not only does it mean more money coming into the markets, but also as these companies and other institutions buy more, it will continue to become more normalized and help convince others to do the same as well, such as how the 37% said that seeing others buy crypto made them want to buy more as well. Now, for a quick update on Ethereum's London hard fork and EIP 1559, the launch date is expected to be August the 4th with block 12,965,000. This is a little bit later than some people have been expecting, as it has been thought that the upgrade would be coming in July, but in reality, it is not that far away, and the month will likely go by quickly with so much other stuff happening in crypto all the time. So the upgrade has already been deployed on the Ropsten and Goerli testnets successfully, so everything is looking good for the final launch when it comes. We all know about the fee burn in EIP 1559 by now and how it will make Ethereum deflationary, but another important part of the upgrade to note is actually EIP 3554, which delays what is known as the difficulty bomb until December the 1st. This should help appease miners who will be losing some of their revenue to the fee burn, as the difficulty bomb will increase the mining difficulty of Ethereum when it is eventually implemented. Speaking of Ethereum, in an interesting and rather unexpected turn of events, Sygnum Bank in Switzerland is going to start offering Ethereum 2.0 staking to customers of its institutional grade banking platform. The staking service are integrated fully into their platform, which is a first for a traditional institutional banking service, and could be the start of a new trend of making it easier to take advantage of higher yields available in the crypto space, such as the roughly 7% for staking on Ethereum 2.0. So the bank described Ethereum as a fast-growing network and staking as an attractive option for long-term investors to generate profits. Doing so through Signum is also attractive for some investors as it is a regulated setting. I have mentioned the regulatory crackdown against Binance a few times by now, and the CEO has finally made a statement about it as well in an open letter. In that letter, he talked about how we are seeing a wider adoption of cryptocurrencies globally and the need for clearer regulatory frameworks in different countries. He also compared the recent pressures by regulators against him and Binance to those experienced during the initial development of the car, saying that in both cases, the laws and guidelines were developed along the way. He did go on to say that seeing more regulation is a positive sign as it means that adoption is growing. He also stated that Binance has requirements to be able to use the platform, strict insider trader policies, the Secured Asset Emergency Fund to protect user assets, and listing standards. He summarized his views on the matter with the statement, "Compliance is a journey, especially in new sectors like crypto. We also recognize that with growth comes more complexity and more responsibility." Shortly after this letter was released, Binance temporarily halted payments from the EU payment platform SEPA for unclear reasons that were said to be beyond their control, but it would not be surprising if it were something to do with compliance and regulation. However, to help deal with the problems they have been facing, Binance is working on hiring a former regulator or government official in the UK to represent the exchange after the announcements by the Financial Conduct Authority stated the exchange was not allowed to conduct any regulated activities in the country, and Barclays started to block customers from using debit or credit cards to make deposits to the platform. One more thing to note on the regulatory side of things is that in the US, the Financial Crimes Enforcement Network has appointed Michael Carver as their first ever digital currency advisor. Some people in crypto are a bit worried about the potential of this appointment, as Carver is known for leading several anti-crypto money laundering cases since 2013 and developing the cryptocurrency seizure and forfeiture policy and legislation. Moving on, Bitcoin outflows from spot exchanges have reached a yearly high. As we have talked about before, people usually withdraw their crypto from exchanges when they intend to hold it for a while, so this could be a bullish sign for the coming months. An interesting thing to note is that the majority of outflow transactions, 5,800, came from Gate.io and were from retail investors, as the size of these withdrawals was less than 1 Bitcoin per transaction. This could show that retail investors have bought at current levels and are prepared to hold through whatever comes next. Additionally, when this data is combined with the recent accumulations of tens of thousands of Bitcoin by whales, it appears as if market participants across the board are looking to hold the coins that they have bought over the last few months for the long term. I hope that you enjoyed this video, guys. If you did, let me know down in the comment section, and I will see you in the next one.